please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Asian markets, they have taken a cue coming in from the US markets overnight, and they are tracking those gains. All those markets have opened up higher. The Nikkei should come up for you on the screen. That one's trading with a gain of close around 0.4%. It's up close around 100 points. At one point of time, it was up more than 150 points. You also pull up the other couple of markets. The KOSPI, for example, that was up 0.3% the last time I checked. It's still holding with a gain of around 0.2%. And both the other markets, that's the Taiwanese and as well as the Straits, the first tick was in the positive territory. So there's green on the screen coming in from the Asian markets. All eyes as well will be on the economic data that's due today in China. That includes the industrial production as well as the GDP numbers. So from the Chinese market, we'll be keeping an eye out on both those two data points. But for starters, the SGX Nifty is telling you that we could start off with a gain of around 35 points. As we've been stating, there are so many positive cues. Won't be surprised if it's more than 35 points just to kickstart trade.
Okay, so positive cues coming from Asia, and that is on the strong rally that we saw in the US stocks yesterday. Now, the Dow closed above 26,000 for the first time as investors' expectations for higher earnings lifted stocks across sectors. The S&P 500 and the Nasdaq also posted record close, ending 1% higher. CNBC's Hampton Pearson gets us a wrap of all that happened on the Wall Street yesterday.
U.S. stocks moving broadly higher in a late afternoon rally, driving the Dow, as you mentioned in your headlines, above 26,000 points for the first time ever. Technology and healthcare companies accounted for much of the gains. Financial stocks also rose, even as some big banks fell after reporting hefty quarterly losses. Investors bidding up shares in healthcare stocks, including Anthem, the insurer adding 3.3%. Industrial stocks were moving higher after the Federal Reserve said U.S. industrial production rose by 0.9% in December, propelled by a surge in utility output. Boeing led the sector's big gainers, rising about 4%. Juno Therapeutics soared almost 51% after the Wall Street Journal reported that the biotech drug maker Celgene might be interested in buying Juno. Juno is one of several companies developing therapies that involve genetically engineering patients' blood cells to fight cancer. At the closing bell, U.S. markets, the Dow up 322 points, the S&P higher by 26, the Nasdaq gaining 74 points. But there were some rough roads in the markets along the way, specifically for Ford Motor Company, slumping 6.7% after the automaker gave a disappointing profit forecast for the year because of weaker sales in the U.S., higher commodity costs, and its investments in new electric and hybrid cars. General Electric falling 5% on reports that the industrial conglomerate might split itself up. GE shares were trading at a 6-year low. Goldman Sachs and Bank of America were down following their latest quarterly results. Goldman said it lost $1.93 billion in the fourth quarter as the investment bank had to record more than $4 billion in charges related to the new U.S. tax law. It also said its trading desk had a weak quarter. Bond prices fell. The yield on the 10-year Treasury rose to 2.57% from 2.54% on Wednesday. Back over to you.
Okay, on that note, let's get in some market opinion from Ellen Zentner of Morgan Stanley and David Lebowitz of JP Morgan on the road ahead for the U.S. markets.
We've got 2.4%. That's a Q4 over Q4, so we do the same measure as the Fed. That includes about 0.5 on GDP growth of tailwind from the tax reform. I keep saying tax reform. Not all of it was tax reform. Some of it was just tax cuts. But taken all together, it does provide a more positive backdrop for business investment. It does provide a more positive backdrop for consumers. I mean, by February 15th, all of us will be getting higher take-home pay. And so there is a lot of positive impulse for 2018.
When we look at the fundamentals, we see economic growth continuing to look solid. To Noah's point, sell-side estimates are just starting to get revised higher to incorporate tax reform. And frankly, when it comes to the Fed, I think the bigger question is whether they're normalizing or whether they're tightening. Right? The Fed right now is still saying we're normalizing. So that means we're just getting back to equilibrium.
Well, we didn't have a very good close in terms of the European markets. All three frontliners, they ended slightly in the negative territory. Remember, the positive trade on Wall Street, that failed to lift sentiment and failed to have any kind of rub-off impact on these euro markets. But in fact, they recovered a tad bit by the time we wound up. though they ended firmly in the red. In terms of data, we got consumer inflation in the Eurozone. That slowed in the month of December to around 1.4%. So that was the data point that came out of there. But in peripheral indices, I think the Spanish index should come up for you. That market, in fact, ended with a cut of closer around 0.5% approximately, a more or less mixed closed, with the Italian index eking out some gains.
Okay, let's shift focus now to the currency space then. The dollar pulls back from 3-year low levels as the euro's recent rally lost steam. Meanwhile, the US currency is steady versus the yen.
Now, back home, it was a momentous day on Dalal Street. The bulls shattered all records. More indices reached all-time highs yet again, and the Sensex, for the first time ever, hit that 35,000 odd mark. They closed with gains of closer around 1%. The Nifty as well surged past that 10,800 mark in afternoon trade, and the Nifty Bank too shattered its earlier highs to end just shy of the 26,300 odd mark. Mind you, that's going to be getting taken out in the first tick itself. Ekta joins us early this morning to run us through all the cues that are stacked up for us. Hey Ekta, good morning.
Hi Nigel, morning. Well, like you mentioned, it was a fabulous day of trade yesterday. It was a momentous day. Sensex at 35,000, the Nifty at 10,800. The markets really gave a thumbs up to the kind of fiscal prudence that the government is trying to maintain when it comes to fiscal deficit as well as government borrowing. So we saw the yield soften. We saw banks gain in yesterday's trading session. Now, interestingly, we saw the FII's net buy for the second consecutive day as well. So maybe sentiment is turning on that side as well. So the FII's net bought around 625 odd crores in the cash market, and DII's also bought around 169 odd crores. So I would look out for the FII trend for the markets at least in the next couple of trading sessions. Now, what we didn't know yesterday, and this came out post markets, which was a CNBC TV18 exclusive, and maybe there was a hint in the Bank Nifty about it as well, where the government is mulling an increase in FDI limit in private as well as public banks. So for private banks, it's up to 100% from 74%, and for public banks, it's up to 49%, versus the current 20% in PSU banks. Now, obviously, the likes of HDFC Bank, HDFC, SBI, IndusInd, Federal, all of these banks would be in focus, also because obviously there would be interest when it comes to an FDI perspective, but also because of the MSCI weightage. So that is probably one of the key triggers, and that's probably going to result in buying in the HDFC twins, and not to say that you're going to see that sort of impact come in on the Nifty. I checked the SBI ADR in the night as well, and that was indicating a gain of around 5% the last time I checked. So maybe that would be an indication that we need to look at as well. Combine this with the fact that Hindustan Unilever came out with very good set of numbers. Their volume growth was much better than expectations at around 11% versus an estimated 8 to 9%. And you have a cocktail of good news for the markets to react to this morning. So that's probably going to be the key focus this morning. And we have the global markets which are supporting as well. So, for example, the US was okay, and we had Brent crude, which has not thrown out any surprises either. So again, the eye on earnings will continue. So we will have reactions such as Bharti Infratel, Adani Transmission, DCB, Mindtree, and we will have earnings coming out today as well. So, for example, Ultratech, Yes Bank again from the Bank Nifty space, Bharti Airtel, Hindustan Zinc, Adani Enterprises, Adani Ports. A lot of these numbers will be coming out today. And we have earnings on Friday to reckon with as well. ITC, Kotak, HDFC Bank, Reliance Industries, HCL Tech, Wipro. Heavy amount of numbers, but I assume Bank Nifty is going to be top of mind.
Okay, so Bank Nifty is going to be top of mind, but you mentioned a lot of stocks, Ekta. Are there any other that we need to watch out for?
Well, yes, like I mentioned, obviously it is going to be all of those bank stocks. We're going to have results post markets, which I just mentioned, that which will see reaction. So HUL, Mindtree, the revenue growth was in line with estimates, but the margin improvement was quite a surprise there. Bharti Infratel, very flat sort of performance this time. Revenue was flat on a Q-on-Q basis. Margins were flat at 44% and maintained. Otherwise, we have Axis Bank. They've increased the MCLR, but again, it'll be in focus simply because because of the Bank Nifty. Yes, Bank has committed $5 billion for solar projects in India. So that stock will be in focus on account of numbers as well. TCS has expanded its partnership when it comes to, establishing a global development center. A lot of good news in terms of projects and, tie-ups coming up for TCS in the past few days. And Jubilant Life, I heard the call, company expects a very strong second half. So that stock should be in focus on the green as well.
All right, Ekta, thanks so much for that. We'll slip into a short break on that note. But up next, the government mulls 100% FDI in private banks. More on that exclusive.
Well, India's banking landscape could undergo a massive overhaul. CNBC TV18 learns that the government is considering a proposal to allow 100% FDI in private banks. That's not all. Sources also tell us that the government is mulling a hike in FDI cap for public sector lenders as well. Timsi Jaipura joins us with the exclusive details. Timsi, how soon can we expect a formal announcement on this one?
Well, a big boost for the banking sector could be on the anvil, and what I understand from sources is the fact that government is currently mulling an option to hike the FDI limit for private sector banks from current 74% to 100%. Meanwhile, for public sector banks, government is considering a proposal of hiking the limit from 20% to 49%. For private sector banks, up to 49%, any private sector bank can raise FDI without taking government's nod. Whereas hiking FDI from 49% to 74%, you need a government's approval. Now, what I understand, the proposal is on the drawing board. The proposal is under active considerations, and Finance Ministry could soon firm up its view. The discussions are going on between various departments of the Finance Ministry, that is DEA and DFS, and DIPP, which are the main key stakeholding departments which are currently discussing this proposal. After Finance Ministry takes up a final view, it might also approach PMO for a formal nod before announcing this development. Now, what is the benefit that the government is seeking by going ahead with this proposal? Now, the benefits attached with this include improving the service quality for the banks, improving the reach that the banks have currently in India, and most importantly, helping in meeting the minimum capital requirements. So all in, it is going to be a big boost for the banking sector or not is something that we need to wait and watch, and most importantly, how soon the decision can come into force. Back to you.
Okay, thanks so much for that, Timsi. Well, we spoke to 4 former RBI deputy governors to get a sense of how they were looking at these developments. Let's listen in to what they had to say.
When government exits, then there has to be some serious investors who will be able to take care of the bank management, the board level operations, and also commit for further capital for the growth of the bank. So keeping all this in view, 100% foreign direct investment in private banks is also welcome.
As far as private sector banks are concerned, I have a different viewpoint. I would not be totally happy with 100% FDI. 74% itself is quite a wide worth. But my belief is that there has to be a local anchor or core, holder in a private sector bank. And with the 100%, I think that idea is not going to happen.
Banking is a very sensitive area, and we have seen during the crisis time how foreign banks did behave. So we have to balance between the need to attract foreign investment. I think one has to set it in one approach in this instead of opening up whole hog in one go.
Ours is a capital-starved nation, and we require capital. And capital cannot come from internal because we have a current account deficit. So there is no other way. If we are allowing 74% in the private sector bank, I don't understand why it cannot be 100%. When FDI will come 100%, that does not mean one entity will 100% because there are restrictions that individual entity cannot have more than 10%.
Once that capitalization will come from this foreign investment, then definitely this valuation of the particularly PSU banking industry, which is at low ebb, that will also improve. The only thing is we should be below 51%. So overall character of PSU bank will be there, and whatever goals you are having, you can fulfill that also.
Okay, so that is going to be the key headline for the day today. But moving on now, the GST Council is set to meet today for the 24th time. The meeting is crucial as this comes less than 2 weeks before the union budget is tabled. Timsi Jaipuriya is here with the issues that are likely to be taken up at the meeting. Timsi, more rate rationalization coming up?
Well, it's a detailed agenda for the GST Council, and this time on the table is rate rationalization for about 70 to 80 goods, about 30 to 40 services. Goods include irrigation equipment, biodiesel buses, whereas services such as there could be a relief for taxi aggregators such as Ola and Uber. Also for service providing apps such as Urban Clap, etc., they could also get some relief. On the other hand, there's a detailed agenda for the compliance. Yes, we have been reporting on this. The Returns Committee had submitted its proposal of combining 3 GST complex forms into one. Whether that proposal actually goes through or not is something that we need to wait and watch and see what GST Council does and takes a view. On the other hand, also on the table would be a detailed discussion for getting petroleum products and real estate under the GST ambit. Right now, what I pick up from sources is the fact that the GST Council is divided on both the proposals. There is no firm view that the Council has whether to get real estate and petroleum products under the purview of GST or not. Besides this, also on the agenda would be a detailed roadmap of rolling out interstate e-way bill. What all states have actually started the trial run, how many number of states would now be joining the brigade, because from 1st of Feb it is mandatory to transport goods from one state to the other through e-way bill only. Also on the agenda would be a detailed discussion on the revenue leakages, how government can stop revenue leakages and enhance its ambit of getting more taxpayers into the system, increasing revenues so that government is in a comfortable position. We need to see what finally happens at the GST Council and what is the outcome. Back to you.